All right, well, let's take a look at Bitcoin. It's given up all the gains that pushed it to a fresh record over the weekend as exuberance over a new stimulus package waned. It fell as much as 5.5% on Tuesday before trimming some of those losses. Let's get some analysis now on the world's largest cryptocurrency and the wider Forex markets with the founder of TechFX Traders, Tony Sycamore. So, Tony, in terms of the decline that we're seeing, the correction, if you will, I suppose it's neither here or there when you consider the overall magnitude of what cryptocurrencies and Bitcoin has done. But I want to throw up this chart taking a look at, exactly the lens through which you look at Bitcoin. This is a BTV chart taking a look at the Bitcoin gold ratio, which has just gone through the roof this year. We heard from Ray Dalio basically saying if you're looking at gold versus Bitcoin, he would rather hold the asset that central banks are going to want to hold and exchange value in when they're trying to transact. Will Bitcoin ever fit that definition?
Well, that's a good question. And I think when we're looking at gold, it has really stood the test of time. Bitcoin's still very new technology. And you are right. What we saw over the weekend, I think, was a reaction to the stimulus package passing and the fact that traders were looking to preempt those flows back into crypto, much like we saw when the last stimulus package passed. But this is all part of the big picture. And what we had out after those flows was news that India is looking to ban cryptocurrencies, and that took a little bit of a sting out of the market. And it all fits into how governments are actually going to look to regulate this new technology, whereas we know gold has been there for a long, long time. It's going to continue to be there. Apart from the fact that India and these other governments are looking at how to regulate this crypto industry, is the fact that the stimulus checks have arrived at a different point of time. Back when they last arrived, people were locked down. They were looking for things to do. They invested in stocks. They invested in Bitcoin. And there was an anticipation that that would happen again this time around. However, the weather's warming up. People can go to restaurants. They're probably starting to think about taking vacations again. There's other things that people can spend their money on. So that has led to some disappointment. But technically, when we look at Bitcoin, it's just another correction. As you said, it's been a huge move to fall by the amount that it has done over the past 48 hours. It isn't a big deal. It still looks like it is in an uptrend, and it's going to continue to remain that way, providing it stays above about 50,000 by my accounts.
Is a clampdown on Bitcoin mining and concerns over, in fact, how these cryptocurrencies are mined a bigger concern than kind of regulatory oversight?
Yeah, well, India are talking about mining, holding cryptocurrencies. They can be investors can be fined for that. I think there's also now an awareness of just how intensive crypto mining is in terms of using energy. And even now we're seeing more demand for Bitcoin that is mined using environmentally friendly, more sustainable energy sources. So that's part of it as well.
One of the reasons that we're seeing such an appeal for cryptocurrencies has been the monetary policy, right? The printing of money out there, just incessant QE. We are expecting the Fed policy meeting just to come out. What is that going to do in terms of dollar strength or dollar weakness that we've seen recently?
Yeah, well, we've got to look down at what the Fed's going to deliver tomorrow, and it is a hugely live meeting. But I can't see any reason. We're going to see growth forecasts upgraded. We're going to see labour market forecasts upgraded after the stimulus package, but there's still an incredible slack in the labour market. Inflation has been persistently low for a decade, so I can't see any reason why there will be a change away from the tone that Jay Powell has been putting forward over the past couple of months. Cautiously optimistic, but still very, very dovish. In terms of what that means to the dots, we might see some of the committee members bring forward their expectations of the first hike, but really, we're talking about hikes here. We haven't even really got the tapering conversation going yet, and that's a conversation for the second half of this year, and then tapering potentially starts next year. So to me, it's a little bit about putting the cart before the horse. We've got to get that tapering conversation going. I think dot plots are going to stay pretty close to zero or at zero, and that will mean that we continue to see this reflation trade work, equities higher, Bitcoin remains supported, copper higher, all those sorts of things that we've seen work since the beginning of this year.
What does that mean for the Japanese yen? We're now seeing it as the worst performer among G10 currencies given this reflation trade.
Yeah, absolutely. The traditional low yielders haven't done very well in this environment. Commodity currencies are a different story. They're benefiting from the higher commodity prices. But dollar yen, or the yen, has been the worst performing currency over the past month. But we're seeing that hitting some pretty good resistance now, up around 109.25, 109.35 area. We look back to 2015, and there was a very significant high in dollar yen around 125.84. And that high we saw early in the week in dollar yen has pretty much all hit that trend line to the pip. So right now, look, it's make or break time, as we've talked about in terms of the FOMC already. But dollar yen above 109.35, then I think that can continue to go higher, potentially in response to yields continuing to move higher. You've got to remember that yields are starting to reflect what equity markets already started pricing back in November, the improvement, the recovery, vaccines, all that type of thing. Bond market's been a latecomer to the party, but what is happening now in terms of yields rising, not necessarily a bad thing.
Tony, where to for the Aussie?
The Aussie dollar I like higher. I think that has found a good foothold above 77 cents. Next for me is that 78.20, 78.30 area, which it traded back in February. And if that level breaks, I think we retest that 80.07 high that we saw in late January.
Tony Sycamore, it was great having your insights. Thank you very much for that. He's a TechFX Traders Director and Founder.